Happy Tuesday. It is the Investor Guys podcast with Bill Barnett and myself, Kevin Mills. We were chit-chatting about our weekends and money and
how they go hand in hand.
And we were also talking about food and Dallas. That
goes hand in hand as well.
Austin and San Antonio. Yes. So lots of things that we were chatting about. We figured we better go ahead and start the show, though, and make you guys part of the conversation as we start talking about real estate.
Yep.
And
so, one of the things that we were yakking about and that Kevin and I talk about a lot off air is compound interest. We talked to you guys about getting a minimum of 40 period, bar none, cash on cash, no exception, and that you should really be looking at 50 or better. And there's a way to learn how to do that. And that's what we do is we teach you how to do that in the real estate environment. And so in the course of doing that, Kev, this guy is a human walking interest calculator.
I wouldn't. I use my calculator and I use the compound interest calculators online, but I love math. And you know what? Let me just do a little precursor to math and let's talk about the value of compound interest in this first segment. So first of all, in case you didn't know this, everything in the universe breaks down to numbers. In fact, everything breaks down to ones and zeros, which is binary code. They say that if we're ever going to meet aliens, if there's life on other planets, the way we're going to be able to communicate is going to be mathematically. It's going to be with binary code. Literally, the cells in our bodies, the molecules on our planet, break down into a mathematical code. So when we're dealing with something that is very math-based, such as real estate investing, having a better understanding of how that math really drives this industry and can make us or break us is very, very essential. And what I see, and I know Bill sees, and a lot of other people see, and a lot of other people just don't even think about, you invest in real estate and you could be doing great, but you're taking those profits and you're spending them and you're looking at your next deal without looking down the line. A lot of you are accumulating properties in your portfolio, but you're doing it just as you find those properties. You're not doing it with a plan, with a mathematical plan in place. So today I want to talk about how to do that. And we'll talk about that in our second and third segments, okay? So that it can match what you're doing on your compound interest front so that you can understand how much wealth you could be putting in your pocket profit-wise, okay? Not just the value of your portfolio. We're going to talk about that. By reinvesting your proceeds into what you are doing every single year for just 10 years. And you know what? Bill and I, we're old farts, and we've got 10 more years that we could be doing this. So a lot of you certainly have more than 10 years that you could be doing it as well. So I want to start off, okay? All of you guys can pull up a compound interest calculator on your computer. In fact, the federal government has one. It's called it's investor.gov /financial tools calculator, compound interest calculator. If you just do a Google on compound interest calculator, you'll see it. So we're going to start with $100,000 because if you don't have $100,000, then you could easily find $100,000 to invest. You can do an active investing strategy for a year. You could flip houses for a year. You could easily have over $100,000 that you could invest into this strategy. Now, this is a passive income strategy, but numbers are numbers. You could invest it into an active investment strategy as well. Your numbers are going to change a little bit because your interest rates, or it's not your interest rates, your interest is going to change differently also. So $100,000 invested into your portfolio with a 50% return. As Bill mentioned, we're looking for 50% or better, or we're just not interested. And we can find 50% all day long on passive income strategies. Now, if I want an active investment strategy, I'm going to do more than a 50% annual return on investment. But passive income, 50% or better. So Bill, I actually told you, but do you remember what I told you the number was? If we invest $100,000 for 10 years, with a 50% compound interest. That means we're reinvesting our 50% profit back into our portfolio every single year for 10 years. What do we have year 10 as our income?
So I want to answer it in two stages. So the answer is yes, I do. I'm going to tell you that number. But first, I want to say, look, when we're talking about $100,000, a lot of you checked out immediately. Think about your retirement account. If you've got control of $100,000 in your retirement account, this is silly for you not to be doing, because the number Kevin is talking about is over. I don't remember the exact on the fuzzy part, but the big part I remember is over $5 million. So $100,000 on the front end, reinvested at 50% for 10 years is $5 million and
$5,766,503.91. And for those of you watching this episode and you didn't watch Thursday's episode, Thursday we talked about investing your money from your IRA and your 401k into real estate and how that works. So if you were doing this in your IRA, real quick, if you're doing this in your IRA, you would have an additional $5,766,503.91 every year coming into your IRA every year after 10 years. That isn't your total accrued. That is now your yearly profit, your yearly cash flow. Now, this is something I know you didn't do the math on, Bill. Do you want to take a quick guess at what your portfolio, the equity your portfolio would have?
Wow. Your portfolio equity,
minimum. Your equity, it would probably be close to 7 or 8, but minimum, we know, because we're reinvesting that 50,000 back, or that 50% back into this portfolio. So we have a minimum also of $5,766,503.91. That's our minimum equity. That's cash equity that we reinvested, not counting time equity, not counting what our tenants have paid down on the mortgage. Okay, so we're talking about $6 million or more equity on this portfolio. Now, real quick, what do you think this portfolio has a retail value of?
Wow, 20.
Well, no, more than that. So we have to go 5 times 5,766,000. So you're talking closer to 18, 19. So,
okay.
Yeah.
5 times 5, 7 is.
So 5 times. Well, here, let's get the calculator out. So we're not
5 times 5.7 is going to be closer to 28 or 29.
Okay,
or
so
30.
28 or 29 is what your retail value is going to be on that portfolio. And
an impressive portfolio.
What's that?
That's an impressive portfolio.
That is an impressive portfolio. And again, to reemphasize, this is in your pocket, $5,766,503.91. If you only do 50%, in your pocket every single year from 10 years on, if you never reinvest that 50% ever again, going into year 11, you don't reinvest it, you're still getting $5,766,000. Year 12, you didn't reinvest anything, you're still getting $5,766,000. So on and so on and so on. Now, let me blow your mind a little bit more. Actually, we're on a break, so I'm going to blow your mind a little bit more when we come back from the break, because this is going to be, if you haven't had an aha moment with Bill and I already, like why you need to get off your rear end and get investing in real estate, this is going to do it for you. Okay. So we'll be back in just a minute. My name is Kevin Mills. I have put together the absolute most comprehensive and complete real estate investor training program that I am going to stand behind it with a double your tuition back guarantee if it does not make you a millionaire. The program is called Millionaire Blueprint. In fact, we call it the Guaranteed Millionaire Blueprint. If you take this course and you follow exactly what we teach you in this course, I guarantee that you will be a real estate millionaire, or I will give you double your tuition back. Read more about our guarantee, read more about this program, and even sign up for the next event at www.guaranteedmillionaireblueprint.com. That's guaranteedmillionaireblueprint.com. "11 months out of the year, Bill and I host real estate buyers events in cities like Cleveland, Ohio, where we ourselves invest and see great returns. We show investors the types of strategies we're using, the types of properties we're using. We introduce them to people here on the ground and the resources that they can use to get started right away. Day 4 of this event, we're actually touring properties and making offers on properties. This event was designed to put properties in your portfolio right away, high performing properties. Read more about the Real Estate Buyers event. Get registered. We'll see you at the next event, realestatebuyersevent.com. And we are back. And before the break, I told you I was going to blow your mind. So remember, we started off with $100,000. Okay. Now, year 10, we're at $5,766,503. What if we took that $700,000 and applied it to that same exact strategy? How much more money are we going to have? Even if we go just seven different scenarios of $100,000 at 50% each, you're talking about 7 times this amount in another 10 years. But it actually compounds even greater if we put it all together. So you're talking about easily close to $100 million by time you hit 20 years in income, annual income in your pocket, profit, pre-tax, while you still have this portfolio that has an even greater value that's working for you. You could do absolutely nothing for the rest of your entire life and have more money than you could probably spend if you tried really, really hard doing it.
And that's exactly what Kevin and I are doing, period, is going after the high-end return. And you got it. Here's an asterisk on this that makes or breaks the entire scenario. You can't spend that money. You let it build your net worth up. So when you go flip a house and you pulling 35 or 40 out of a flip is not a big deal. You hadn't really accomplished, it is a big deal to us individually when it happens, but it's really not a big deal. So when I do that, if I'm looking to fund my $100,000 start, I can't go spend this money. I got to get my seed money, because remember, that's all you're contributing is the initial seed. So when you go out and say, hey, you know what? That's a great plan. I can't do it in 10 years because I don't have $100,000. I can do it in 11 years because I can take this next year and use the things that Kevin and Bill are teaching and make $100,000 in an active investment strategy, and then put it over in the passive strategy and let it go from there, as I'm still going out and I'm doing more property now. And so I'm still going to make money for me to go spend right now with my active investing strategy. And then I'm going to be flipping, reinvesting, compounding my money on the passive side. And so I'm going to be growing both ways. So in 10 years, you can be stupid rich in this business if you're paying attention and staying focused.
And there's other ways, other scenarios, the way this can play out too. Again, 50% is the minimum that Bill and I are looking for. All right. A lot of you might want to do this as a side business, but some of you want to do this as your full-time business. There are scenarios where you could easily make more than 50%. Take that 50%, reinvest it back in, and take that difference and use it for your own living interest. Now, I don't know if I'm going to get this calculated or not because of the numbers, but there are, you guys might have to do the actual long math on this. I already did it. There are properties that will pay 140% and even greater annual return on investment. If you
cash on cash.
Right. If you can find a market, or you can find properties, and I keep looking over here because I'm trying to pull this up on a actual compound interest calculator. Most times when you get over 100, they don't want to calculate it. They just, it wasn't built to do that. 140%. If you keep reinvesting it and reinvesting it and reinvesting it, do you know what 140% is after 10 years, Bill?
140 after 10 is probably going to be 600 million.
It was like 633,900,000. It rounds to $634 million. Yeah.
It's a
ten
stupid
years.
number.
Yeah, in 10 years. There are properties. There are properties that we look at in our real estate buyers event that give you 140% and greater. We're looking at vacation properties here in Florida that to 140% and greater annually return on your investment. If you bought those properties for 10 years down here and just kept reinvesting that money into those properties and you're just getting 140, you're talking an insane amount of money. And that's every single year. Money in your pocket every single year. Now, take that 634 million times 5. That is what the value of your portfolio is, retail. Okay. And you're going to have that same $635 million, $34 million in equity, minimum equity in your portfolio. I'm sorry, Bill, what were you going to say?
I was just sorry, I didn't mean to interrupt you there. I want to make sure everybody hangs on to a couple of things here so we don't lose anybody when we're talking about it, because these numbers get wild and crazy and it's easy for people to check out. I don't want you to do that. I want you to hone in on this. One, we're talking about your cash on cash return. So if I'm buying a $200,000 property that requires 20% down, that's 40 grand. When I'm talking about getting a 50% return, I'm not getting a 50% return on the 200 grand that the value of the property is. I'm getting a 50% return on my $40,000 cash on cash. So I'm making 20 off the 40, and that I'm turning around and invest. So that's one thing. And then the other thing is, so Kevin said this several times, but I want to make sure you're hearing this. And that is, don't miss the fact that if I'm doing a passive income strategy, I'm doing rental property, that while I have this reinvestment strategy going on, my tenants are over here paying down the balance on my properties. And I had told Kevin this, and we may talk a little bit more about this when we get back from break. But I want you to think about, I'm going to hold it to break.
Okay.
I'm going to hold it after the break.
So we're going to take a break real quick and we'll be back. Once a month, with the exception of December, Bill and I go to markets where we have experience and we host a real estate buyers event. These are markets that have great return potential for your real estate portfolio. We're going to show you the properties that we buy. We're going to show you where to buy, where not to buy, the strategies to use to make great income from these properties. We're also going to show you resources and individuals here on the ground that you can use to start building your team so that you can repeat this process over and over. The real estate buyers events are designed to put high-performing properties in your portfolio right away. If you're interested in hearing more about the Real Estate Buyers Event, realestatebuyersevent.com. That's realestatebuyersevent.com. Read more about the events, check out the schedule, and register. We'll see you there. GuaranteedMillionaireBlueprint.com. That's GuaranteedMillionaireBlueprint.com. You owe it to yourself to go there and check it out. If you are ready to become a real estate investor millionaire, like $1 million profit cash flow in your pocket every single year or more, GuaranteedMillionaireBlueprint.com. While you're there, check out the guarantee. Yeah, that's right. There's a guarantee that if you take this program and you follow what you learn in this program, you will become a millionaire. In fact, I'm going to return double your tuition back if this program doesn't make you a millionaire. Check it out. GuaranteedMillionaireBlueprint.com. That's GuaranteedMillionaireBlueprint.com. And we're back, and just before we went into break, Bill had something that he was going to share with us.
So here's something I want you to think about. Most of you, if you've been around the real estate investing game for any period of time at all, you've likely heard the name Russ Whitney. I had the pleasure of working for Russ for a while, and as I started my speaking training career, really enjoyed it. Terrific guy. Russ built a $200 million plus company on one thought. That thought was this: gee, if you buy one house a year for 10 years, your retirement is taken care of for the rest of your life, and you'll live better than most people in retirement without question.
And that's
one
just
house
10
a year
houses.
for 10 years. That was it. That was the entire strategy that this company was built on. Now, of course, we talked about a lot of other stuff, but we kept coming back to what's the core concept that we're trying to teach people. Buy one house a year for 10 years, and you're a millionaire. Two, your retirement's taken care of forever. And that's what people overcomplicate this investing game. One of the things I loved about Russ, wouldn't let that happen. Don't overcomplicate this. So when we talk about finding a property that can return me 50% a year cash on cash, it is not this unicorn floating around out there. It is simply paying attention, being diligent, and doing your work. This is a business. You do have to work at it. If we lost you when I used the work word, then we lost you. Because if you don't treat it as a business, it's not going to pay you as a business. If you don't treat it as a profession, it's not going to pay you as a professional. If you do, you're going to be grinning from ear to ear. I've done multiple deals where my check, after all fees, and I know Kevin's done better than this, but after all fees, I've gotten multiple checks where it was over 100 grand. The first time you get $100,000 check plus that has your name on it, that you don't have to share with anybody other than your spouse. I still had to pay income taxes on that, but that was it. All the real estate associated stuff was done. All that was all paid at the close. Now, what's come back for me to take to my bank account was 100 plus. Having done that multiple times, but I'm going to tell you, the first time you do it, it's like, holy cow. And it changes your life and it'll change your business, but you got to get started sometime. You got to get started with the right people. And look, if you've invested in some program, you invested $20, $30, $50,000 and you hadn't gotten anything done, that's not your fault necessarily. That may be the program's fault, because most programs aren't built the way Kevin and I build ours, which is based on results, not on education. All of these companies out there, the big gurus, are typically education companies. They don't want to get involved in anything past that. Kevin and I do a lot of consulting where it is about results oriented. Yes, we charge for it. We're not bashful either, but it's about results. And what are you concerned with? Results.
Yeah, and a lot of companies, they that's their model, is to keep you trapped, keep you coming back for more education, more education, more education. If you've heard it from me and Bill once, you've heard it a million times. Get out there, get started, go do it. I wanted to put some of these into real working terms for some of you guys. Now, those of you who are watching us, a few weeks ago, I was in Key West. Okay, the condo that I stayed in has other condos for sale in that same complex. In fact, one of them even in that same exact building that we were in. That was in Marathon, Florida, which is just north of Key West. Now, those condos are selling for about $250. Some were just under, some were, actually they were all $250 or less. They come with a deep water slip for a boat, and they are a block away from a beach. You can literally walk to a beach. In fact, we did. We walked to the beach. So 2 bedrooms, 2 baths, just by the numbers, strictly by the numbers from the website on Airbnb. The average rental is $388 per night for Airbnb and Marathon. And you guys can go check this out yourself. The occupancy rate is 72%. So 72% at $388 per night, minus the mortgage, minus the taxes, minus the property management minus utilities, because on a vacation rental, we're paying utilities. I'm giving you a strategy that we're using, and minus the HOA. This HOA was a little high, maybe not too high for a condo. It was like $555 a month. But again, that includes maintenance of the dock and the pool and everything else. Strictly by the numbers, using those numbers. $250,000 is $50,000 down. If I'm buying two of those, that's my $100,000 right there. Okay, that's $100,000. I'm done for the whole rest of the year. I don't have to buy anything else unless I want to. But $100,000 invested, these two properties. If you do the math, which I did, it's 140% return on both of those properties. That's why I got that 140% on that 100,000. Now I've got properties in Cleveland where I'm getting 180% and greater. Okay, but those are properties that I didn't put $50,000 in. The properties I put $10,000 into. Could I buy 10 of those properties? Absolutely. But real world, this is from 3 weeks ago. You guys saw me sitting in the condo doing one show, and you guys saw me sitting outside by the water, by the deep water slips, doing the other show. Actual property for sale, $250,000, $50,000 down is 140% return on that $50,000, that $100,000 if I'm buying two of them. Real world situation, real world numbers. This isn't just things that we're pulling out of the air saying you could do this if you did this, or you could do this if you did that. A lot of times you'll see other people say, oh, you could do this and you can do that. Or we found this crazy deal, and it is not about looking for those crazy deals. You hear so many people say, oh, we found this deal that was 20% lower than this, and you are going to pull your hair out if that's what you do for your real estate investing career. You are running around chasing any possible deal that might be below market value that you can flip, or you can do this or you can do that for, because somebody somewhere doesn't know what they're doing or what they have, and they're trying to sell you a property that isn't worth what it's really worth. I can make market value. I can make asking price offers on properties and still make 50%, still make 60%, still make 100%, still make 140%. At $150,000, I didn't have to talk anybody down. We can make a full market offer on that property, and we're still making 140%. Why waste my time? Why waste their time? Why lose the deal? That's the truth of real estate investing. They want to try to reel you in with all this hype and all this excitement. Take my program because I'm going to show you how to find the hidden deals. I'm going to show you how to find the gems in the dirt. I'm going to show you how to do. It's just not that. If you know how to invest in real estate and you know how the numbers work, you know what properties to look at that you can purchase asking price and still make money on. Mm-hmm. And I'm done preaching.
No, that's it. And look, sometimes we're going to do that. We're going to preach at you. Sometimes we're going to spank you. But look, it's because we care. It's because both of us are patriots. America needs more real estate investors. We've got a lot of problems with our economy. Real estate is the backbone, period, of the economy of the United States of America. The single family housing market is 7 times larger than the stock market. And I'm not talking about just the New York Exchange. I'm talking about the exchange. I'm talking about the commodities exchange. I'm talking about the CBOE in Chicago. We are 7 times larger than the market. And that inventory of all of that property rolls over, and depending on what stats you follow, anywhere from every 3.5 to 5 years. And all that is, if you think about a deck of cards and you open a brand new deck of cards up, all the cards, all the suits are in order. And so then what do? You take them and you shuffle them. That's how I look at the real estate market every 3.5 to 5 years. All the houses get reshuffled. Some new people come in, some people die off, but the inventory gets spun around and a ton of people are in new houses, whether it's upgrading, downgrading, whatever, moving just to a different city. But all those houses get reshuffled. And that's what causes this enormous size of our real estate investing market. So we're going to push you because we know that it's in your best interest to get in the game and then to get good at the game.
Yes.
So
it is always in flux. And no matter how many good investors we add to the pool, it's not going to matter. Everybody always asks me, what if you have too many investors? What about the competition? There isn't really. It doesn't work that way. I would rather work with an educated investor who's trying to sell me a property than somebody who doesn't know what they're doing. Yep. There can never be enough educated investors out there making this a better industry, making this a better country, as Bill said. It's not the competition at all. I would love to see every single person who we speak to about real estate go out there and be successful in real estate, because it means we will all be more successful.
Yep. It's so rare that when I'm out at property, and I'm out at property almost every day, that I run into an investor. I mean, there's another speaker here in town who's a really good friend of mine, a guy named Jimmy Reed. And I mentioned Russ Whitney earlier. Jimmy and I worked together at Russ Whitney. So Jimmy and I have known each other for 30 plus years, or right coming up on 30. And he is every bit as active as I am in the market. And we're in the same market. It's not like I'm in Dallas and he's in West Fort Worth. We're both in Southwest Fort Worth, and the bulk of our transactions are in the same county. I've run into Jimmy in the field one time. It's just rare. I was out looking at property last week, and I saw about 6 or 7 people standing out in front of the house, and I went, it's an investor, and it looks like he must be consulting other investors. And I pulled over and I got out, and I was like, hey, are you guys investors? And they looked at me like I'd lost my mind, and they went, no. And I went, oh, you're not? You look like a group of investors. And they were being trained to be home inspectors. Okay. So they were out at a house, and I was like, okay, well, you look like investors, which is a compliment. See you bye. But it's just incredibly rare. That's how much competition there is out there. It's incredibly rare that I bump into them.
Yeah, and it's not like when you watch TV. It's not like, property guys or whatever it is, where they're trying to get the property before their competition, and it just doesn't work that way. We're over again. If we could leave 2 thoughts for you in your head after this show, it is: get started investing in real estate and continue to reinvest your profits into your portfolio. Make your portfolio grow. Go ahead and tighten your belt for a few years, whatever it takes. Do extra deals. Put that money back into your portfolio, because it does grow. It grows like a tree. If you don't believe me, get out your computer, go to a compound interest calculator, throw in some different interest rates using $100,000. If you only have $50,000, throw in the interest rates of $50,000. I think you're going to be surprised what you can make over the course of 10 years. Reinvesting, as I said, 50% or more, because we don't do anything on a passive investment strategy that's less than 50%. Bill, closing thoughts, and we'll let these people get on with their day.
Yeah. Hey, if you've got a job, one of the things that we always stress is don't quit your job until you have a year's worth of your salary in the bank that you've earned from your real estate investing. Then you have a decision to make. But look, to do this thing successfully, we need about 8 or 10 hours a week out of you. Because if you're focused on what you're doing and you know how to do it, you just don't have to spend more time than that. And in that process, I always suggest, hey, you know what? Keep your job. You'll know when the time is right. I certainly wouldn't do it any less than what I said, any sooner than that, but you'll know when the time is right. And this is a fabulous business. We know you're interested or you wouldn't be here. Many of you are already in the business, but if you're not doing the kind of numbers that we talk about, you need to jump over to the website, investorguyspodcast.com. Look at our trainings, and when they're coming up, come join us live, join us when we do our webinars, whatever it happens to be, and learn how to do this business on a high-end basis, meaning a high-end return, not necessarily high-end properties.
Yeah. And there's a lot of people who for $635 million would work their rear ends off for 10 years. They would work hard if they knew they were going to get $634 million in 10 years.
Yep.
All it takes is investing in 2 properties this year. Pay attention to your strategy, spend maybe an hour or 2 a month, on numbers and strategies, making sure things are going like they're supposed to. Periodically check your schedule because these are Airbnbs. Now, those numbers I gave you are Airbnb only. They're not Airbnb and Verbo. And they're not accounting for tweaking. That's the average for what people are getting right now who aren't paying attention to everything else in the market. So you're 140%. That's strictly by the numbers. You could do better than that. So if you want to spend a little more time, you could do that. But I'm talking about a couple of hours a month once you've purchased both of these properties. And you don't have to do anything again until next year. And you just, again, spend a few hours finding some properties, making offers, get it done. You're spending it's not rocket science. Now, $634 million in your pocket in cash after 10 years, that easy. And it's not just $634 million in your pocket. It's $634 million worth of equity in your portfolio. And I'm not even going to try to do the math on the retail value of what your portfolio is worth. Yeah. And at that point, honestly, we're not buying individual properties. We're looking at bigger properties that have more doors so that we're still doing less work. But it really is that simple. It really is that easy. It's just a matter of knowing the numbers, knowing the strategies, and getting started. Thanks for joining us. We will see you guys back here on Thursday. Bill, enjoy your weather, enjoy your day.
You brother.
And I'll talk to you later on.
All right, see you now.
Bye.